Why the US dollar is the world's currency? Why does the entire world use the US dollar? Why is oil traded in dollars? Why can America print money while other countries can't? It's not an accident. It's not just economics. In 1944, a deal was made in a small town that changed everything. The dollar became the world's currency, and it gave America a power no empire in history has ever had: the ability to control global trade without firing a single shot. Today, we're breaking down why the US dollar is the world's currency. Because once you understand this, you'll see the global economy in a completely different way. So stick around till the end. What is a reserve currency? Before we dive into why the dollar dominates, let's first understand what a reserve currency actually is. A reserve currency is a foreign currency held in significant quantities by central banks and major financial institutions as part of their foreign exchange reserves. Countries use these reserves to conduct international transactions, pay off debts, and stabilize their own currencies. Throughout history, different currencies have held this position. The Roman denarius dominated trade in the ancient world. The Spanish silver dollar was widely used in the 16th and 17th centuries. The British pound sterling was the world's primary reserve currency during the 19th century and early 20th century, reflecting Britain's position as the dominant economic and imperial power. But today, the US dollar accounts for approximately 58 to 60% of global foreign exchange reserves. No other currency comes close. The euro holds around 20%, the Japanese yen about 5%, and the British pound roughly 5%. This dominance didn't happen overnight. It was the result of specific historical events, strategic decisions, and institutional frameworks that we'll explore in this video. The Bretton Woods System, 1944 to 1971. The foundation of dollar dominance was laid in July 1944 at the Bretton Woods Conference in New Hampshire. Representatives from 44 allied nations gathered to establish a new international monetary system for the post-World War II era. At this time, the United States was in an unprecedented position of strength. The war had devastated Europe and Asia, but America's industrial capacity was intact and expanding. The U.S. held approximately 75% of the world's monetary gold and was the world's largest creditor nation. The Bretton Woods Agreement established a fixed exchange rate system where currencies were pegged to the U.S. dollar, and the dollar itself was convertible to gold at $35 per ounce. This meant that foreign governments and central banks could exchange their dollar holdings for gold from U.S. reserves. This system provided several key advantages. It created exchange rate stability, which facilitated international trade and investment. It established the dollar as the primary medium for international transactions, and it positioned the International Monetary Fund and World Bank, both headquartered in Washington, as central institutions in global finance. For nearly 3 decades, this system functioned relatively well. Countries needed dollars to engage in international trade, which meant they had to either export to the United States or accumulate dollar reserves through other means. This created constant global demand for the dollar. However, by the late 1960s, the system faced growing pressures. U.S. government spending on the Vietnam War and domestic programs led to persistent budget deficits. The U.S. was printing more dollars than it could back with gold, and foreign governments began to notice. In August 1971, President Richard Nixon suspended the convertibility of dollars into gold, effectively ending the Bretton Woods system. Many economists predicted this would diminish the dollar's international role. They were wrong. The petrodollar system. After the collapse of Bretton Woods, the United States needed a new mechanism to maintain dollar demand. The solution came through oil. In 1974, the U.S. reached an agreement with Saudi Arabia, the world's largest oil exporter. The terms were straightforward. Saudi Arabia would price its oil exports exclusively in U.S. dollars and invest surplus revenues in U.S. Treasury securities. In return, the United States would provide military equipment, protection, and political support. This arrangement soon extended to other OPEC members, creating what became known as the petrodollar system. The economic implications were profound. Oil is the most widely traded commodity in the world. Every country needs it for transportation, manufacturing, electricity generation, and countless other purposes. By requiring oil to be purchased in dollars, the system created structural, permanent demand for the U.S. currency. Here's how it works in practice. If Japan wants to buy oil from Saudi Arabia, it must first convert yen into dollars. If France wants to import oil from Iraq, it needs dollars for the transaction. Even when oil flows between two non-American countries, the deal is denominated and settled in dollars. This means countries must maintain substantial dollar reserves. They must earn dollars through exports or capital inflows. They must keep dollars in their central banks to ensure they can purchase energy when needed. The petrodollar system effectively replaced gold as the anchor of dollar value. Instead of precious metal, the dollar became backed by the world's most essential commodity, energy. Advantages of dollar dominance for the United States. The status of the dollar as the world's reserve currency provides several distinct advantages to the United States. First, it creates what economists call exorbitant privilege, the ability to borrow in its own currency at lower interest rates than would otherwise be possible. Because foreign governments and institutions need to hold dollar-denominated assets, there's consistent demand for U.S. Treasury bonds. This allows the U.S. government to finance budget deficits more easily and cheaply than other nations. Second, it reduces exchange rate risk for American businesses and consumers. When U.S. companies conduct international trade, they often do so in dollars, eliminating the need to hedge against currency fluctuations. This provides a competitive advantage in global markets. Third, it gives the United States significant geopolitical leverage through the financial system. International transactions overwhelmingly flow through U.S. banks and the SWIFT payment network, which operates under U.S. regulatory oversight. This allows the U.S. to impose economic sanctions with exceptional effectiveness. When the U.S. Treasury designates an entity for sanctions, it can effectively cut that entity off from the global financial system. We've seen this with Iran, Russia, North Korea, and various individuals and organizations. These sanctions can be more devastating than military action, crippling economies without firing a shot. Fourth, the dollar's reserve status helps the U.S. run persistent current account deficits. The U.S. imports more than it exports, but this trade imbalance is sustainable because foreign entities are willing to accumulate dollar assets. They send goods to America and accept dollars in return, which they then invest back into the U.S. economy. Finally, ignorage, the profit from issuing currency, benefits the U.S. significantly. When other countries hold physical dollars, they're essentially providing an interest-free loan to the United States. Challenges and the future. Despite these advantages, dollar dominance faces growing challenges in the 21st century. China has been systematically working to internationalize the yuan. The country has established currency swap agreements with dozens of nations, created the Asian Infrastructure Investment Bank as an alternative to Western-led institutions, and developed the cross-border interbank payment system as a potential SWIFT alternative. China has also been purchasing oil in yuan and encouraging trading partners to settle bilateral trade in local currencies. Russia, particularly after facing Western sanctions, has dramatically reduced its dollar reserves and increased holdings of euros, yuan, and gold. The country has pushed for non-dollar trade with partners like China, India, and Turkey. Even traditional U.S. allies are diversifying. The European Union has explicitly stated goals of increasing the euro's international role. Central banks worldwide have been gradually reducing the dollar share of their reserves, though it remains dominant. The rise of digital currencies and blockchain technology presents another potential challenge. Central bank digital currencies are being developed by numerous countries, which could eventually facilitate international transactions without requiring dollar intermediation. Additionally, U.S. fiscal policy raises long-term sustainability questions. The national debt exceeds $34 trillion and continues growing. Large fiscal deficits and political polarization over debt management create uncertainty about long-term dollar stability. However, despite these challenges, no clear alternative has emerged. The yuan isn't fully convertible, and markets doubt China's commitment to financial transparency. The euro faces political fragmentation within the European Union. No other currency combines the depth, liquidity, stability, and institutional framework that the dollar provides. The network effects of dollar dominance are also powerful. Because everyone uses dollars, everyone continues using dollars. Financial infrastructure, legal frameworks, and business practices are all built around dollar transactions, creating significant switching costs. The US dollar's position as the world's reserve currency is not an accident of history. It's the result of deliberate policy decisions, institutional frameworks, and America's unique position in the global economy. From Bretton Woods to the petrodollar system, from SWIFT to treasury markets, the dollar's dominance is embedded in the infrastructure of international finance. It provides enormous advantages to the United States, but also creates dependencies and tensions in the global system. While challenges to dollar dominance are real and growing, the fundamental question remains, what's the alternative? Until a credible answer emerges, the dollar will likely maintain its position as the world's currency. Understanding this system is essential to understanding how the global economy actually functions, not how we wish it functioned, but how it really operates. Thanks for watching. If you found this educational, subscribe to our channel for more economics and geopolitics content. Like this video, share it with others interested in understanding global finance, and check out our other videos on international economics. See you in the next one.